Quick disclaimer, everyone. ASX Trader, myself, and Master of the Markets is an authorised representative of ASX Australia, and this content is for general educational purpose only and does not constitute financial advice. A little bit about me. I've got a Bachelor of Education. I'm a certified financial technician through the International Federation of Technical Analysis and certified Level 1 Elliotician as well. But let's move into the markets. Okay, before I dive into what's looking good this week, just want to say a big thank you to anyone that supported me here. Got my first article out in News Corp. So they asked me to come on and do a 4-week trial. I was just lucky that one of the person that's just been put in charge of the business department ended up doing my course and absolutely loved it and was like, I need to get you on News Corp. You're amazing. And I was like, awesome. So trialed it out. It's looking good so far. I think it will turn into a permanent thing. And then, yeah, funnily enough, I then had Mick message me saying, mate, you're on friggin' Apple right now. So yeah, your news story on Apple ended up trying to. So if you haven't read it yet, the article is there. Go to my Facebook page and you can click the link there talking about interest rates. And I have done a YouTube video about this as well in depth if you look back and check that out. It was one of the things that I identified back in 2020, 2021. And I was lucky enough to lock in my interest rates at under 2%, 1.94%, knowing that bond cycle. Okay. And your interest rates follow the yields. The yields have an inverse relationship with your bonds. So if you know what your bonds are doing, you kind of know what your interest rates are doing as well. Okay, because remember, the markets move because of the expansionary phase and the contraction phase, which is when they want you to spend money, which is when they don't want you to spend money. And they combat that with things like interest rates. Okay, so it's not just by chance that they happen to suddenly raise interest rates. It's because they printed all of that money. They put all this money out there. They then they've increased the liquidity supply. They then need to decrease it and stop the spending to stop and combat inflation. Okay, so anyway, thank you very much for everyone that got there. What I want to look at today is there's a lot of markets that are looking very toppy and there's a lot of markets that are breaking out. Okay, and it's always like I talk about, go like surf where the surf's good. It's really that easy. Okay, and skate to where the puck is going. The sector that I identified as being a really good one to keep an eye on this is utilities. So utilities, you can see here, had a massive breakout yesterday. Okay, I identify it. So every week on a Sunday night, I do, actually, I'll show you. So every week I do a weekly outlook. So into events. Go past. So here, I do a weekly every Sunday at 8 o'clock. I do a weekly outlook, which is me going into the market and looking where the surf is good. Here's a little AI summary of it, which is great. But what you'll notice here, so coming down here, let's go down to sectors. So financial is potentially topping out. I've talked about the fact that a short-term bounce but potential downside risks remain. So I just want to show you what I mean by that. So we were here. I said we're going to go, but we're probably going to get a bounce here because I'd be very surprised if we don't. However, I would be careful if it rejects here, because if it rejects there, then you've got a zig, a zag. That's a change of market structure, and that will be a top. And as you can see, it's your classic head and shoulders pattern. So just keep an eye on that. If that's going up and you start seeing signs of weakness, yeah, it is looking a little bit. At least it's going to pause here. Could also reverse and have a bit of a thing. So just be careful on the financial sector there. Going down here, staples is something that we've identified as being quite strong. And I'm just going to show you why. So looking at staples here, XSJ, you can see we've broken change market structure. Okay, so we identified the bounce here and then the buyer stepping in higher. And you can see here that change of market structure. And now we're looking, once we clear here, it's good. You know, you're getting back up again. So really enjoying the staple sector right now. And if you've a couple of players I've talked about, A2 Milk has broke out. That's broken up out of its major accumulation base now with your beautiful spring right here. So that one absolutely nailed that one. Woolworths, like I talked about last week, it's now put in a change of market structure off its major support here. So sector's looking good. Now this one's leading the way as well. Coles, okay, has broken out of a, what is that, a one since 2020. So 5-year sideways base has broken up, tested it as support. Volume could be a little bit better. It might chill a little bit more, but still looking quite good as well. Okay, so there's a couple of really good consumer staples, and I just want you to see that staples are breaking out. So staples is a need, not a want. It's a defensive play. I just want to talk about that. Next thing I'm going to talk about is utilities and emerging opportunity. I've said here possible expanded flat formation suggests a breakout opportunity. If the utilities index breaks resistance, a strong bullish move could follow. And again, strong money shift a defensive play. Why is money coming into utilities here? Okay, so actually I'll show you what I had in the video. So we'll play it here.
So if this comes back through, then we know what it was. It was to grab liquidity, which is what an expanded flat does. So keep an eye on that, because I think you've got that. I'm pretty confident that's a perfect, and older guys, you guys know the pattern: 1, 2, 3, 1, 2, 3, and the 5. So 3, 3, 5.
So this is me talking about Elliott Wave expanded flat
pattern,
which is this pattern right here. Okay, so it's where you got bullish move and you go 1, 2, 3, 1, 2, 3. It grabs liquidity, gets everyone on the wrong. Then it goes 1, 2, 3, 4, 5, grabs the liquidity from the stop loss, then takes off. Okay, it's a textbook. It's one of the most brutal patterns that exist, because what does it do? Gets everyone long, gets everyone short, then takes off. Very, very common textbook kind of pattern. And that's what I was seeing on this one here. So we had the 5 up, and then you can see here 1, 2, 3, 1, 2, 3, and then the 1, 2, 3, 4, 5. That's the expanded flat pattern. So that's why, and then I talk about here, whenever you break support, it's for one of two reasons: to grab liquidity, or
we definitely.
Let me bring it back a bit. Let me bring it back to where we're at. You can see.
Yeah, it's just like a nice, perfect little expanded flat. Look at this. So you've got your first wave up, and you can go 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. And look at it. Took out the high. Took out the low. So I believe that is, again, this is my Elliott wave. So this is my betting on the horse. That is an A, B, C. So what that means is, if we get back through that support, then you guys, we break support for two reasons: grab liquidity or continue the trend. So if this comes back through, then we know what it was. It was to grab liquidity, which is what an expanded flat does. So keep an eye on that, because I think you've got that. I'm pretty confident that's a perfect, and older guys, you guys know the pattern: 1, 2, 3, 1, 2, 3, and the 5. So 3, 3, 5.
So that's, yeah. Always look for that, guys. If you ever break out and it's on a 3-wave move, it's likely either an expanded flat or a running flat, where it's to grab liquidity. Okay, and that's what I showed you with the RL the other week. It's what I showed you with CHN the other week. It's a very textbook pattern to get people. It really frustrates people, because what do you think happens here? They trade the breakout through resistance, and they get stopped out, and then they go, oh man, it's bearish, and then it goes the other way, and it really frustrates people. Okay, because you got to remember, it's always the market against you, and these kind of patterns absolutely wreck retailers, because they're confused with what's going on. Hang on, I'll be long, I'll be short, what's going on? And that's what they're designed to do, confuse you. Good thing about it is, after an expanded flat, you normally have significant upside. So anyway, let's go keep going.
That pattern. So yeah, I really like that, and we're definitely looking for utility sector next week. And if that breaks up early on, boom, you'll get some phenomenal entries on utilities. And again, looking at
you going into the utilities sector, because I know it's looking good. Let's find something that may look good.
Okay, good. So yeah, hasn't got there yet. So this one's come down in lower in volume. So I see we've made a new low here. And you're definitely still getting your blinkers here. Bullish diversion. So it's definitely showing the signs, but as you can see, still in the downtrend. So what I'd be looking for is, straight away I'd be like, okay, we broke this major support here. See, support. I'd be then going, ooh, is this a liquidity grab? So if it came up and then came back and bought off support again and changed market structure, boom. That'll be a change of market structure out of your channel. Take the entry. Prior liquidity grab that happened on bullish divergence. Okay, so keep an eye on it. Yeah, that's right. I remember now. So yeah, this I believe expanded flat. So 1, 2, 3, 1, 2, 3 took out the high, grabbed the liquidity, and then 1, 2, 3, 4, 5. Same as the sector. So yeah, should be an expanded flat. Came down to our zag zone 302618. Perfect. So once we get a change of market structure, 100%, I'll be looking to get it. It pays a good dividend too. I think it's like 7 or 8%. Tell us on here. Dividends, yeah, 8.4% dividend as well. But again, let's look for the reversal pattern. If it breaks out of there, you beauty.
All right, so that's how. And people are like, man, how do you find these ones? Because instead of looking at 2,000 stocks, I look at where the good surf is, and that way I'm only looking at a couple of sectors, and I look for whatever's within that sector. So if you then look at APA, so we identified the sector, it's probably a liquidity grab, and then you can actually see what happens from it. Okay, so you can easily identify, oh, look at that. That move down was not supported by volume. So then what you can do is pinpoint the entry, and you can see here that support broke. We break support for 2 reasons: to continue the trend or grab liquidity. So then when it does this and goes higher high, higher low, higher high, and changes market structure back through, you then know, oh, nice little inverse head and shoulders. That's a reversal pattern back through support. Volume didn't confirm that last move. What was it? It was a liquidity grab. Probably marks a bottom. Okay, so that's how you can get these moves, and this is how you can get these kind of things. People are like, how do you get these major bottoms and how do you get these moves? It's just that, okay? And again, you do this for 5, 10, 15, 20 years, and it's just second nature. It just comes to you, and you can just, you can look at it like blink of an eye and just see it. So yeah, I just wanted to point that out. Utility sector looking quite good right now. Consumer staples sector looking right good. Healthcare sector has broken support. Okay, so we are looking for 2 things. Again, you're up in this range up here. Okay, which is, let's look at the big picture. It's in this major correction right now. It's up at this resistance. It's rejected the resistance. It's broken support. Okay, support, broken it. We've broken the support for 2 reasons: to fake out, get everyone on the wrong side, or continue the trend down. So if it does this and comes back up, you know what that is. It's a liquidity grab, which means it was to fake out, grab the stop losses here, and then you're probably going to get a bottom there and then break out. Okay, it will be confirmed once we take out that high, which is what I talked about months ago. Healthcare has been on my watch list since I think back here. Hasn't broken out yet. Now what I'm looking for is this liquidity grab, similar to what you just saw there. Okay. So yeah, just wanted to point them out, and then you can dive in from that to check them out. XMJ is still looking really good. Okay, we've broken out change market structure here. I just want to see it kind of bounce off here and continue up there. If it does that, so let me tidy up this mess. You can see this was the downward channel that it was going in here. Okay, overall, lower low, lower high, lower low, lower high. All of a sudden here, if they start buying higher, if we can go like that, then you beauty. Then what have you done? You can see what this is. Major support. That's flipped to resistance. And if you can get a change of market structure off here, back through that, then that's a reversal pattern. Okay, so I'm watching precious metals very closely to confirm that reversal there as well. Another sector, communication sector. Resistance has flipped to support and looking to change structure here as well. And then if you dive into that, Telstra looking really good. Okay, same thing here. You got your nice inverse head and shoulder. Again, this was something we identified back here, back when we're in the zag zone, change of market structure back up there. And then up here, as it's breaking through, identify that you're probably going to get the pullback, then the breakup. But yeah, Telstra's looking really good. You've had double bottom. Now you've had your correction up, your zag zone, and now looking to continue the run. I'd like to see a little bit more volume come in here, but overall looking quite decent. One that I'm keeping an eye on as well is FMG. This recent gap down here happened on lower in volume. Okay, so I don't act on lower in volume, but it's something that I've noticed, meaning that volume's not supporting the move. That means that if I get a change of market structure back, I will take it. So from here, you can clearly see it's in this downward channel right here. But what I've noticed volume from that move, and this is what I just want to show you the bigger picture as well. You see how you've had your move up here, volume supported that move. And then can you see how from there you've had a lower low, lower high, lower low, lower high? See how that's downtrending? Look at what volume's doing. Higher low, higher high, higher low, higher high. See how volume's going up, but this is going down? What that's showing you is how unbalanced volume works is that when there's more volume in the up candles than the down candles, this will go up. So what that's showing me is that there's volume in this, there's not volume in that. There's volume in that, there's not volume in that. There's volume in that, there's not volume in this one. Okay, and that's what you want. That means that the impulses have volume and the zags, the corrections don't. And that's what it's supposed to do. Funnily enough, this is exactly what MTM students are learning this week. So that's why that was the example I used. That volume must confirm the trend. Use volume as a confirmation tool to validate trends and assess market strength. Okay, so remember volume has nothing to do with price. All it is telling you how many of them have changed hands. Okay, trend volume can be dominated in any trading asset, stocks, bonds. In this case, it's a stock, it's FMG. All it is the total number of shares exchanged during a specific period, e.g. 100 shares, daily volume's 100. So if you're looking back at that now, what that's telling you is these ones here, they might be going up on say 1,000, and these are coming down on 200 or 300. They're going up on 700. These are going down on 100 or 200. So there's more volume on these impulses up than there is on the corrections. And that's something to take notice of, because what that is kind of showing me is that this looks like accumulation to me. Okay. So again, this is just me, my predictions, looking at it. I don't act on predictions. I wait for the confirmation that that prediction is correct. So example of that would be the weather app is predicting it's going to rain today. That doesn't mean I'm going to get my raincoat and get it and go out there if it's not raining. Okay, what that means is I'm predicting it's going to rain. And then when I look outside and I see that it's raining, yep, oh, well, it told me it was going to. I can't say I didn't know it was coming. Same here. All right, so what I'm looking for here is waiting for this to actually change market structure. So if that comes up here and breaks through there, what that becomes is impulse up, A, B, C, and then the next wave up when that's the change of market structure. And I can't say I didn't see it coming because of the volume. Okay, but we don't know if the bottom's going to go there, or it might keep coming down and it makes a new low on, like it can come down and make a new low on lower in volume. Okay, so this is one of my sayings. I would trade the trigger, not the signal. The trigger is the market structure. You probably heard the old saying, price action is king. Okay, the volume is supposed to confirm the price action. So that's just what I'm looking for, because if that happens, if this comes up, changes market structure, that gap down, that's supposed to be really bad news. Why has the market written it off? And why has it then broken above it? And why did volume not confirm it? Things like that. So yeah, just keep an eye on that. If we get above that $20 mark, nice big round number there as well, that will be an official change of market structure on FMG, and one to keep an eye on. And again, looking at the thing, let's look at iron ore as well, because why is FMG going to go up? Well, let's look at the iron ore price. Okay, so iron ore, you can see support, 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 support. What's that? Support. Okay, so I'm now wondering, well, hang on, they bought off here, bought off here, bought off here, bought off here. We broke that support to continue the trend of grab liquidity. It's come down, come right back up, and now they're buying there again. So to me, what does that look like? A liquidity grab. Okay, that's what the price action looks like. Now let's bring up the volume and see if it, look at that. Volume is increasing on that. So again, iron ore looks like it's been accumulated right now. So again, what I'll be looking for is that we've had, once we break above here, so I'll be looking for something like that, then that's a change of market structure on iron ore with your liquidity grab, which typically marks the bottom. Okay, so then that's why FMG is going to go up, because the iron ore price is going to go up, heavily tied to it. Okay, so something I teach my MTM students is don't just look at a chart and just go, oh, it's that because of that. Go in with critical eyes, go in and actually analyze the price action, analyze what's happening, and think about why it's done what it's done. Okay, you can see why that exists. It exists because what did it do? It grabbed all the liquidity and the volume from there. Okay, you can see if you go back to A2 milk and look at that major bottom, you can see why that exists. Okay, because it came down, grabbed it. Anyone that got the bottom there was like, oh yeah, come down and grab their stop loss before marking the bottom. Okay, you can see why it did what it did, because it, again, remember, it's them against us. So don't just go, oh, there's a triangle, or there's a wedge, or there's a whatever, like that. They're irrelevant. You know, why is there a wedge there? Why is that happening? You know, like for instance, a wedge is an accumulation pattern. Like if you go to Bitcoin, I use that one because it loves a wedge. Let me get off the log. Okay, that rising wedge, that people go, oh, a wedge is what is it? It's distribution. It's tightening up. Again and again, if you critically look at it, you can see the selling and the buying is really spread apart. So showing strength, then all of a sudden, look what's happening. It's getting tighter, tighter. So you got to ask yourself, well, hang on, why are the buyers and sellers getting closer when back here they're spread apart? You can see where the trend is weakening. Okay, so then that is actually, that whole thing there is distribution. That's what a rising wedge is. Same thing here. That whole thing there, that wedge is accumulation. Okay. Same thing with the one down here. That whole wedge here is accumulation. That's all accumulation with your spring. Okay, so if you look at it, if you understand why the market's doing what it's doing, you'll then you'll start to think and you'll understand, and then you'll start to see the moves happening, because you're like, oh, that's what I would do. I would do that to wreck people. So when you start thinking like that, you'll understand why the market moves the way it does. And then instead of getting wrecked by it, you actually understand it, and then you can actually ride it instead and be on the right side of it. Okay. Anyway, a bit more educational this week, but I'm not going to go too much into the individual ones, but I've shown you the sectors. If you guys see any good ones within those sectors, please share, write it in the comments, tell me what's looking good. But keep an eye out on staples sector, keep an eye out on utility sector, keep an eye out on communication sector, and keep an eye out on, actually, let me just show you a quick way of doing it before I jump in. So if you come to Google and just type in ASX sectors, come up here, list corp, ASX sectors, left click that. And these are all your sectors. You can see the ticker XEJ, XMJ, XNJ, all these ones here. Okay, so if you now go, oh, the utility sector is looking good, come down here, left click it, and it will bring up all of the utility sector. Okay, and then you can actually do it on market cap. You can go, okay, that's the big boy. And if, you know, let's go, oh man, I want a penny down there, come down the bottom, look at the pennies and see what's looking good. Okay, but this is how you can then find it. All right, so if you see a sector looking good, come and find out, well, what's in there, what's looking good. Okay, that's how I was able to find APA. Go through and can you find any other ones that are looking good? If you do, share it with us. If I find something good, I'll share it with the group. Okay, and this is how we find opportunity, because this is what I do. I've then got hundreds of students doing the same thing. So again, we come across most things. They're really the scanner that's going out there and finding everything, because we identify the good surf spots, and then we find what's looking good within that good surf spot. And then it gets to a point where it's like there's too much, so then you got to go, okay, what's looking the best? And that's really the thing. A lot of people go, oh, near enough's good enough. No, my opinion is, why does this deserve my attention and my money? Sell me why. You know, I'm the opposite. I ain't going in there unless I really don't have a choice, because the thing's so darn good, I cannot deny it. Whereas most people are like, oh man, I must be on something. I got to do something. I got to be in something. Oh, this looks okay. And then you'll wonder why you have a bad win rate. Okay. Treat it like you do your partners. You don't just date anyone. Okay. You've got a checklist of things that you need and you want in a partner. You should have a checklist and things that you need or want in a stock or in a crypto or whatever it is you're trading as well. All right. Near enough is not good enough. All right, guys, if you like the video, please like and subscribe, and I will catch you on the next one.